Hey folks, how you doing? Kunal here, Bulls on Wall Street, filling in for Paul. He's recovering nicely. Let's take a look at the market. So we got a little bit, finally getting a little bit of a dip here, but you can see it's not too hectic. We're having a nice orderly pullback in the S&P. Looks like we may come down to this level here, or maybe the 20-day moving average. Those are going to give us some really nice entries in this market. That's what I want to see after a big bull run, by the way. It's like this type of orderly pullback. That's one of the things that Paul always told me is like, watch the nature of the pullback. The nature of the pullback will tell you and give you clues into how the market will behave when the pullback is done. If it's an orderly pullback, then it's going to move in a more predictable way. It's going to move in a more orderly way, and that means that we can add risk and we can trade with confidence because we have something that's not too haphazard. So just something to keep an eye on. The rest of the indices are very similar. The NASDAQ here, this is the QQQ. We're just flagging here, and so that to me is very bullish. After such a big thrust, you can see we got really overbought, and we're just flagging, and so that's a pretty bullish scenario and something to kind of keep track of. Let's take a look quickly, at the watch list. Apple Computers is forefront on the swing trade side. Ideally, a pullback here to the 20-day moving average may give us an opportunity, but really the area that I'm looking at, I would much rather see is this kind of 120 mark, which is the level where the breakout was. I think that 120 mark, between that and the 50-day moving average, is going to give us a really nice reward to risk ratio. Obviously, the stock's come a long way, and it is pulled back $6, but after such a run, I think we're going to need a little bit of a deeper pullback. So I really want you to watch these two levels. AKRX, still hasn't pulled back yet, but we're watching that pullback into this kind of bottom of this breakdown bar. Angie was an earnings play with a huge move. We've had a multi-day pullback. We've worked off that kind of overbought condition, and we're starting to base out over here. A couple things that I'd look for is a few more days of sideways motion will give us a level of support with a stop right under this level at 634. If we don't get that and we just keep pulling back tomorrow, then we'll look for a test of that 50-day moving average, which could give us a good entry. This stock's got a lot of shorts in it. The float's pretty low. I think this one could have some juice. BBEP getting closer and closer to my level here. I'm watching this 50-day moving average for the potential entry on this. You can see here just a nice, easy-go-lucky consolidation / pullback after its epic run. BIS, this is one of our current positions. Still looking well here. Stop goes right under these lows, and you're starting to round up here. And, any type of, push. I think our first sells, we want to be kind of in this 38 range, and then maybe our 20-day moving average. I think that will give us some nice sell spots. Buffalo Wild Wings is just a powerful stock here. This type of consolidation is very bullish. Anything that we can take in kind of the bottom of this range, I think will give us a nice reward to risk ratio, as we've got a lot of layers of support over here. CHGG is another stock that had it's got a lot of shorts. The float's pretty low. After that big push, we're starting to pull back. I want to see a deeper pullback here, though. I want to get this thing as close to 750 as possible to manage our risk. And if we can do that, we can put either a stop under this level, or maybe we get a deeper pullback over here. But I'm guessing with the float being so low that this is one of those stocks that doesn't come back and fill the gap all the way, that it ends up flagging, as lower float stocks tend to do that. Dang is a bottoming pattern over here. We want to see it pull back closer to this area down here to 9. I think that would give us a much better entry. The one thing to watch, though, is watch the Chinese stocks, because they've been really weak. You're seeing some earnings blow up to stuff in that, and so I'll be watching some of these stocks like WBAI and some of its friends. And if you can't catch a bounce in the sector, see some of these things are really weak, then we won't want to play this thing, at least on my end. FireEye, this is our short position. Our stop goes right above here, and now we've got a little bit of confirmation. I think we want to start covering some towards the bottom, at least our first bets towards the bottom of this flag pattern, and then really our final target will be the 20-day moving average. Overall, it's a bullish pattern. This was a counter trend trade, so we want to take our profits, and we might potentially look at this for a long. FSLR, it's not even flagging yet. This thing needs a pullback or flag here, but I want you to keep an eye on this stock because look at the volume accumulation in this thing. Obviously, it's dying down as you see the volume dying, but this is an accumulation zone right here. It's really overbought. It's probably going to snap back a little bit, but we want to watch the nature of the pullback to see if we can get potentially some ads. Google, this is looking fantastic. You're coming out of zone, but now you're on 1, 2, 3, 4 up days. We need a pullback in this thing before it can be a buy. Habit is a thin stock. You can see only 183,000 shares in volume, but any kind of pullback towards this 50-day, 20-day moving average, if we see it hold, that could be a potential entry. If not, an entry towards the bottom of the range with the stop under could be in cards. Watch Shaq, S-H-A-K. That'll give us a tell. GMEI, see this one it's a long-term bottoming pattern. We've had 1-day pullback. We may need a couple more days to kind of even this thing out, but this is a stock that I'm watching. It's still, fairly overbought, so we need to kind of work that condition off. But keep this on watch. LinkedIn, it's going to need a little bit more time. A couple things we're watching is, pull back to the bottom of this range here, and you got your 20-day moving average, catching up too. So, if it takes a couple days to pull back to the bottom of the range, at that point, the 20-day moving average will have cut completely up to it, and that'll give us a really, really nice low-risk entry on this. I think that's going to be a good spot for this thing. Lulu looks ready right here. I mean, I like the look of this big, long consolidation. It's a nice flag pattern. I think this trade can still be taken. Obviously, on a little bit of weakness, you never want to chase this thing up. And then, we'd have a stop under this level over here. So probably about a 65, 75-ish stop. Nugget starting to bounce. It's coming out of range here. So, you're starting to see that. I don't have a surefire pattern on this just yet for a new entry. If you're already in this, then you've got a great entry, and you want to be selling some up into spikes. We're at its first level of resistance. It's already popped a couple bucks. So, you can always peel some off here, and then your final target is into this zone up here. Trip is one that's come off its bottom over here and is very similar to Google. Had a nice push on some big volume. We need this thing to flag out over here and kind of hold this zone. And if it does, and we can work up this overbought condition, I think that will give us a potential long. Twitter, this is one of our positions. It's a little bit nasty on Friday, but it doesn't change the overall look of this. So far it's still a really strong stock. To me, that's, a hold unless, we start to really break kind of some lows. And UCO, right? This is, we trade this a lot. We're at the bottom of the range. So you could take a position here with a stop under. If you like that and you want to sell some up into the top of the range towards the 9s, and that'll give us a nice low-risk entry. But this is a bottoming formation over here. Now, it's low risk, too, so if it doesn't hold its lows, which it might not, then you're going to get out with a fairly small loss, but you want to make sure you get as close to support as possible. And use USO as your proxy, not UCO, but USO. UCO is the 2X ETF for that. So that's it for now, guys. Let me know if you have any questions or thoughts or anything like that, and we'll get this thing going. Take care, guys, and good luck this week.